I've made the mistake many times of thinking, oh, I have the count. This is the count. Absolutely, this is the count according to Arias wave. Well, this is a different count, and I think it's the most probable count, given that gold probably won't go to zero, even though that was one of my previous ideas. I think it all just comes down to identifying each wave with no bias. Now, apart from the fact that money printing will continue to go out of control even more in the future, I think this is probably a reflection of that. So, in this particular view, it's similar to silver with a bit of a twist. The GFC looks like was the end of a corrective portion of this move, which is a long term pattern since before 1344. All right, there's a gold chart. I've posted it before, but you can find it online. And I think that what we're looking at here is basically the start of a new trend, except gold is in the process of producing a weak five wave move, wave one, since the GFC. Now, I'm just going to explain a little bit about this pattern just to give you a bit of context. So, so I'll go back to the end of wave B, I believe happened here, 1980. Then we had a wave C, right? A weak five wave move. Right, I've tried to dissect this many different ways, but if you look at it quite simplistically, we have a one, two, three, four, five with alternation between two and four. We have the start of the D wave, which D wave looks to be an expanded zigzag, right? If you try to make this a five wave move in total, I think it falls short for a couple of reasons. One, there's a missing subdivision for internals for, like, for example, well, the problem to start off with is wave one's too small. If that's wave one, how can this be wave five? It should be similar in length or similar to wave three in length. Right, now that's obviously using some Elliott wave terms there, which is okay for wave five lengths, and it doesn't really cut it. So there's no reason why that would be true. According to Elliott wave, I mean, even now I'm starting to see it myself. Now, there are internals here, as I've marked out, for an expanded zigzag correction. So therefore, that means that we have wave A of the zigzag, small. We have A and then a large B in the middle here. You can see I've marked out the AB of that zigzag. And then we have a C, a D, and an E. Now, if you take a look at this five wave move here, you can see that basically there's also another problem if you're counting this as a five wave move here, is that for starters you're missing a subdivision as well. Okay, you've got like a one, two, and what would be probably three there. One, two, three, four, five, except you've got no four and five. So to me, the internals suggest that that's a C, a D, and an E with a five wave move starting here, right? And basically going the length of that move right up until we get a wave E. Now, was a pretty small wave E, absolutely, but it probably just shows the resilience of gold, given that it was a money printing event that caused it in the first place, right? And did they hold back on printing too much money? Well, not really. They bailed out the banks. So, in my opinion, if you look at the Dow Jones or any market, stock market, you'll notice that the market did go up well, since 2000 it kind of crashed. So, but in general, that period of time from 2000 to 2006, right, was basically pure money printing, which was the subprime mortgages, you know, issue that they were having, where too much money was being printed, aka too many loans being made, money out of thin air, right? sorry, that actually goes further than that. My mistake. To 2008, right? So that whole period of time was excessive money printing. That's what led to the GFC. So that kind of makes sense why gold went up then, the way it did, right? And expanded the D wave, right? Which is interesting. So I suppose after the GFC, we did have more stimulus, which created the first wave one, which is probably why it ended in 2011. Now there's a lot of talk about, manipulated market, etc. Sure, absolutely. But according to this pattern, it'll only be manipulated for a limited time before it actually explodes higher. So once it creates its weak five-way move, or if you want to be looking at it from an Elliottian perspective or jargon, you'd be looking at a leading diagonal, right? Now, I believe Arias wave gives you the view to suggest that type of thing, right? But in saying that, look, I'm gonna lay it out there. To be honest with you, some people might even think that this is an ending diagonal, right? I could have been one of them, except not with this particular view. And that's because it'd be way too small of a wave in the whole grand scheme of things anyway. But apart from that, money printing is rampant. So how would this end? It doesn't make sense, right? So I think yes, it is a hedge against inflation, but not in a manipulated market, which is still human behavior, right? If you manipulate a market, well, it's usually a human that's doing it, regardless if they're using quants and bots and whatever trading to do it, algorithm, whatever. It's all just made by humans anyway. So regardless of any of that, it might explain the short term, but then there'll come a point in time where it won't be held down any longer. Now, mind you, once this does produce wave three, which is probably going to be very soon, we're going to go into a wave four and a five. Now, does that mean that we're going to get a huge correction down? It doesn't necessarily mean that that's going to be the case. We could see another we could see another correction that is short and sharp, or we could see the beginning of a correction and then the rest of it expanded to the upside, right? And I've seen many times in some particular markets where you've got this type of, you know, wedge type pattern that I have seen it have a very small pullback. Now, this technically could have a large pullback, and that's why I think it's possible because of what's going on in the markets and what I expect the markets to do, right? Now, if you haven't seen my past videos, I'll cover that more moving forward. But even with silver video, which I just posted and I'll link below just the other day, I did mention that the price of silver could go to roughly GFC levels, just above it, um, around that area, basically. And this, what they say about leading diagonal patterns, they retrace pretty deeply, right? And that's fine, and that's what could be something that happens very soon. Now, I believe that in the stock markets, I don't know, the ASX, for example, we're looking at an ending pattern. The Dow Jones, an ending pattern, right? Basically, a move that's not going to be too strong, but it's definitely going to oscillate within at the highs, right? So how it does that, wave five could be potentially pretty small before we get to that tipping point. Now, don't worry about how I'm drawing this out, right? It's not exactly going to be perfect, and I'm not trying to say it's going to take 2-3 years. But in saying that, I don't know how long it's going to take to unfold this rest of this move. Now, the only clues we have at this point is that we had a sharp, deep correction wave two. We could see alternation with a small wave four and then a wave five, right? And if you know anything about these wedge patterns, wave five could be small as long as wave three is not the shortest. So there's no rule broken, and overlapping uh, can happen as well. I mean, we just don't really know how that's going to look. And there's no point trying to predict it. All we could do is follow the waves during that process and see what we come up with at the time, right? It's just something that needs to be followed along with. And I suppose that's where my analysis comes into this whole thing. But in a nutshell, that's what I believe is going on with gold. And that's why you've got, like, how can I explain this, right? You've got, uh, how can I say it? Look, I'm not going to bother talking too much about these waves here because look, they look pretty sharp, especially from a weekly perspective. Like if you go to a daily perspective, right, which is still not, it's not too much of a small degree, to be honest, right? You know, you could see some weakness in that move there uh, at the end of wave C to sort of reinforce a little bit that that wasn't a wave three. Uh, we've got this GFC move that is basically looking like a week five wave move also, right? Like I tried to see if that, I used to think potentially it was a wave four correction or some kind of wave four, some kind of corrective pattern, but look, it just looks like a simple five wave move that's weak, right? A bit of alternation between two and four. Once again, overlapping means weakness. It's not your typical kind. I call them type twos, right? Because they're not moving down in three waves, they're moving down in five waves, but they're overlapping anyway. So it's a type two. Weak five wave move because it's less common than the type one, which is obviously the zigzag down every time it moves down, right? Um, the subdivision's missing there if you're trying to make it a five wave move. Also, the really long move up here, which I believe is the beginning of a new trend. Yes, wave three is weaker than wave one, but look, that's kind of what makes it the wedge pattern in the first place, right? The leading diagonal, the weak five wave move. There's a reason why it's a weak five wave move, right? It starts off strong and then it gets weaker. I mean, that's how it gets its name. But I suppose once this is over, this should basically explode, and then all that weakness that we've been seeing will disappear. Um, and I used to think that because it's getting weaker at the top end, it's basically at the end of a trend. Given that we had this move here, if you're just looking at this pretty simply without any wave methodology, you'd think that's a three, some kind of four and a five or whatever. But I don't believe that. The subdivisions do not paint that picture for me. So I'll leave it there and I'll catch you in the next one.